Elon Musk, the CEO of Tesla, stated during the company's annual shareholder meeting in August that the economy had passed its worst inflationary period, and that most of the commodities and parts used in the production of Tesla's vehicles will become less expensive over the next 6 months. Musk said that he believes a slight recession will occur within the next 18 months due to a sharp decline in inflation. Welcome back to Everything Tesla Facts, everyone. The majority of investors are still worried about what their investment will yield for them in the short, medium, and long terms. Even though most people may not want to worry too much about what the stock price will be in the upcoming years, for fear of overestimating or expecting too much from the stocks, knowing what you're likely to make from your investment can help you make important decisions regarding your shares, which is only natural given that the main goal of investing is to turn a profit. How much will Tesla's stock be worth in the upcoming year then, given the many favorable reasons that could raise its price? To find out, keep watching. However, before we begin, please remember to subscribe, hit the like button, and ring the bell notification if you enjoy this kind of content so that you may be informed about all of Tesla's developments, even though a lot of people may be very optimistic about Tesla because of the various intriguing goods that are now being developed and those that are in the works. It is simple for the typical investor to have unrealistic expectations for the automaker. Similarly, when setting high expectations for Tesla's stock price, it's crucial to remember that the automaker is also vulnerable to a variety of market pressures that could lead the price to plummet if appropriate action is not done. Unexpected market shifts, like inflation, have caused substantial declines in the stock prices of companies like Rivian and QuantumScape. This occurred even though the majority of their investors didn't anticipate it. Given that Tesla is not immune to these influences, will its stock fall in the upcoming years like some other stocks did, or will it rise sharply like it did in the past? You acquire all the information. Make sure you watch this video through to the conclusion. Before dipping marginally to 8.5% in July, inflation hit a year-over-year high of 9.1% in June. It will require a little more time to confirm Musk's recent assertion that the inflation trend is downward. Furthermore, Elon Musk appears to be concerned about a number of other issues besides inflation, which is really somewhat of the opposite of the issues affecting the EV industry. Musk recently expressed his worries about the impending impact of deflation in a tweet. This occurs as the Federal Reserve raises interest rates rapidly in an effort to slow the economy and rein in inflation, which in March was close to zero and reached a 40-year high in June. After 2 rate hikes, the Fed's rate is currently at 2.5%, and during a meeting later in September, it may announce a third raise. Musk expressed concern that a further increase in interest rates could result in a sharp decline in prices. He went on to explain that this might lead to buyers delaying purchases in the hopes that prices will drop and they will be able to acquire cars at a reduced cost, which would reduce demand overall for Tesla. Deflation is another significant issue that EV companies need to monitor in addition to inflation. Automakers will probably have difficulties after the creative destruction brought on by deflation, according to Cathie Wood, CEO of ARK Invest. According to a Tesla stock investor earlier this year, automakers with goods that are susceptible to obsolescence and those who are operating their shares in the short term with less investment in innovation may find it challenging to stay up. With the anticipated deflation, however, based on Cathie Wood's example, Tesla might not have much of an issue here if innovation is a key tool against deflation. Additionally, the carmaker may be able to lessen the negative impacts of deflation if it gains a firmer grip on its 4,680 batteries. By purchasing Maxwell in 2019, Tesla was able to obtain the dry coating technology for its 4,680 cells. The dry coating method might drastically reduce the cost of Tesla's batteries by eliminating a big portion of the production process. A report claims that Tesla may save as much as $5,500 on each Model Y battery pack. Andrew Baglino, Senior VP of Powertrain and Energy Engineering at Tesla, stated during the company's Q2 2022 earnings call that the company will begin producing the new 4,680 cylindrical battery cells at its Gigafactory in Texas in the third quarter of this year and anticipates increasing production by the end of the quarter. By the end of 2022, Baglino added, Tesla thinks its Austin battery factory will be able to produce enough cells for over 1,000 battery packs each week, surpassing the weekly production of Fremont's Cato Road facility. The price of Tesla Model Y will significantly increase if it can effectively increase the output of its 4,680 cells. According to a number of analysts, Tesla might be able to lower the price of its Model Y if it can perfect the manufacturing of dry coating for 680 weld cells and increase production by the end of the year. Dry coating is the most difficult step in the 4,680 cost reduction process. Despite being a procedure that is reportedly crucial to the production of these cells, experts claim that the dry coating method is a major bottleneck preventing Tesla from increasing the output of its 4,680 battery cells. What are your thoughts on this? Do you believe Tesla will be able to manufacture the 4,680 battery cells as promised? Tell us below. More work is being done to safeguard these cells in light of Tesla's Cybertruck. According to some analysts, construction of the Cybertruck, a pickup truck designed to operate with 4,680 cells, could begin in 2023, even though the Cybertruck was first released about 3 years ago and Ford and Rivian have dominated the electric car market, particularly the pickup market. Tesla appears to be still working on the project. An incredibly dilapidated Tesla Cybertruck was seen being pulled on a public roadway sometime in August. The insider claimed that the car looked to be in very poor condition, although this doesn't explain why the Cybertruck hasn't been released. Yet, it does demonstrate that Tesla is still working on the project and that, given Musk's repeated claims that the pickup truck can withstand almost anything, physical testing is the only option. Given the development of Cybertruck, stock price could rise significantly over the course of the upcoming year. When the 500-mile range semi-truck and Cybertruck are released, NASDAQ projects that Tesla's shares will probably hit about $500 by 2023. Another factor that has helped the stock rise to this level is the shortened delivery schedule for Tesla's Model Y. The automaker recently declared that it had shortened the 8-week delivery wait period for the Model Y in China to 4 weeks, further demonstrating the far greater availability of its Model Y and Model 3 electric automobiles. Tesla once again cut the delivery time in China. Tesla sold 76,965 cars manufactured at its Chinese plants in August. Compared to the previous month, its sales have almost tripled. Given the high demand for the Model Y in China, the higher deliveries at the Shanghai facility may be a sign that Tesla's supply chain problems are abating. Tesla's stock had dropped 37% in July. Shares of the company fell even further after Musk's acquisition of Twitter, but during the past few months, the stock has been rising, and it just saw a strong bounce that caused the price to rise by 3.62% once more and settle above the $300 barrier. The Tesla that people will probably see over the next 12 to 18 months will showcase the capabilities of a trillion-dollar company, according to Adam Jonas, Managing Director of Research at Morgan Stanley. He emphasized step changes in manufacturing, cost reduction, capacity expansion, model lineup, and service offerings. This is definitely what the automaker is supposed to do. One of the many reasons to invest in this contentious but fervently committed electric vehicle firm is that Tesla is a highly valued automobile manufacturer. Additionally, the 3-for-1 stock split has reduced the cost of Tesla stock for regular investors. These figures provide an idea of what Tesla investors can anticipate from their shares, despite the fact that they are merely projections and estimates. Additionally, they assist in providing prospective investors with the opportunity to base their decision on factual data if they are still undecided about investing in Tesla stock. How do you feel about the price of Tesla? Do you believe the stock price will be able to hit the 2023 price that NASDAQ has projected? Please share your thoughts in the comments section below, and don't forget to include your prediction for Tesla's value over the following 12 months. Click on this movie on your screen to learn more about what Tesla has been up to in the last few days. I'll see you there.